Record.
Hello, friends. Let's talk about the end of the week and what's been going on. The Fed met this week. I'm not going to lie, this is not going to be the most entertaining video we've done outside of just this new look, right? I just got rid of the beard. I'm actually going to tonight take it down to a mustache. I doubt I'll make it through the weekend with it because Carolina will probably make me shave. But nonetheless, we're seeing what we can do today. This is fun with facial hair. But no, truthfully, this video, a lot of good stuff in here. I'm not saying it's entertaining, but it's really good data. So if you're a home builder, a real estate agent, or somebody in the real estate profession, pay attention. A lot of great stats to push out and promote and kind of like help you plan your day, your week, your month, and truthfully the next 12 months. So let's get into it. So rates, no bueno. They're still going up, man. The last 2 days, like look at today. This, remember guys, in this case, it's opposite, right? This means bad. Rates are going higher. When red goes down, rates are going higher. The Fed met yesterday. They didn't do anything with rates. It's just now it's taking that time to digest. And a lot of it's just based on the comments the Fed's making today and some of these things that they're kind of, sifting through the information. They're going to, maybe raise rates one more time, but they started saying things about the economy is too strong, this, that, and the other, and that rates may just stay higher longer. So we'll talk more about that in a second. Right now, rates are hovering around that mid sevens, which is nuts. Timmy, if you're watching this, you once, we were at a soccer game together and you predicted 8%. I was predicting rates somewhere in the fives by the end of the year. So you were winning at this moment, my friend. I wish you weren't. But again, the Fed basically said they expect maybe one more hike by the end of the year. They didn't do anything yesterday or Wednesday of this week. So they didn't do anything. They did kind of revise where they think the economy is still growing at that 2.1%. That's the yellow. That's actually really good. I mean, the Fed wants between a 2 or 3% growth. However, again, I think we may be, that recession eventually is going to show two of those numbers, 2 quarters in a row. That makes it a recession. We'll see if it continues at this positive 2.1 or not. The big scary part, which is not on here, but the U.S. government has a ton, like 30% of its debt is coming due in the next, I think like 6 or 12 months for refinancing, which means we refinance from those super, super low rates to today, the federal government. We're in a real problem. That's something that hopefully our political candidates will talk more about. I did accidentally cut off the years, but you guys can see these are quarters, and each dot on here represents a Fed member. Not all of them are voting. This is anonymous, so we don't know which ones, but you can see this top left horizontal dots. There's, I don't know, what, a dozen of them there. They see one more rate hike coming at the end of this Q4. So they, the others, 7-ish members don't. They see it holding steady. And then you go to the next quarter. You can see how there's one person that thinks somehow in the beginning of next year, we're going to have 3 rate increases. That one sole little dot up there. The rest of them think that we're going to, kind of stay steady. And there's a lot of them that said they may start cutting rates. And then you go to the following quarter, Q2 of next year, and Q3 and Q4. You can see by Q4 of next year, they predict rates may be cut to the point of, instead of being the 5.5-ish that they're at today, they may be around that 2.5 range. Call it 12 months from now, give or take, 12 to 15. So we shall see, but this is interesting because each one represents a member. We just don't know which one's voting. In our National Association of Realtors basically said that the main reason people aren't buying is they're waiting for rates to come down. 39% of buyers or potential buyers. So 40% of the market is saying that they're not buying because of rates. The next big reason is multiple offers. They're waiting so the market's not so hot. That's 26%. So guys, that's 65% of the market is either sitting around because of rates or they're waiting for this, quote unquote bubble to pop. Here's the problem. If you're a home builder watching this, you guys have the ability, we can do it. We can do forward commitments, one house at a time. So if you guys have the cash and you want to offer a 4.25 like Lennar is doing in Denver, admittedly, this is their softest market. They're trying to get homeowners in and help with the affordability because Denver is expensive, but Lennar is offering a 4.25. So if you're a home builder, call them if you guys want to talk about doing this. But here's what I was saying about that 26% that's waiting for homes to come lower in multiple offers. It ain't happening. Look at the yellow at the bottom. 2 million household formations. So 2 million new households are getting created each year. And you can see the starts. We're not keeping up with that. New houses are only 1.2 million, 1.28. Year over year, that's down 15%. Rates spiked again this time last year, August, September, July, technically, July, August, September, and home builders stopped building for Q3, Q4. They just were waiting. And then all of a sudden the market came back and they started building again. So we are not catching up. And in fact, the median home price right now is 407. That's up 4% year over year. So people are like, oh, there's a crash. No, houses are getting more expensive and they will continue to get more expensive because more people are growing up and needing to move somewhere. All these millennials, a lot of great stats on here, guys. I'm not going to read them to you because you guys can push pause, but a lot of good stuff. House prices are going to keep getting more and more expensive. So these are the millennials, 20% saying they believe they'll never own a home, but you can see why they don't want to buy. The biggest one right there in the middle of the page, available homes are too expensive. Hey, newsflash, they're going to keep getting more expensive. So if they can, they should be buying today. Spread that. Looks like the second or third, depending on which color you want to look at, but right underneath it, mortgage rates are too high. Mortgage rates aren't forever. Remind them of that. Yes, it stinks are in the mid sevens, but they can and will eventually come lower. So we'll find out. And then the ability to save for down payment. That's the other big one there for the millennials. So we do have programs that can help them with that. Home Fund It. Call us if you want to talk more about it. The Gen Zers, 1 in 10 don't think they'll buy a home. You can see their reasons here. I thought this was interesting. This is where they think they'll get their money. Inheritance. I kind of laughed. A lot of them think inheritance is going to be their waiting for mom or dad to die off before they can buy a home. Lastly, the rental market is coming down. We've talked about housing, etc., but I just thought this was interesting. The rental market is getting softer for some pockets. So, great, but at the end of the day, that'll help inflation, but that's not anything that's big or normal. So lastly, you guys have probably heard about the auto workers. I didn't realize this. They're pushing for a 32-hour work week, 4 days a week. I think that's just a bargaining tool. They'll take that off the table if they give what they want, but they want a 40% pay raise over 4 years. So what was interesting, we just celebrated Labor Day a couple of weeks back, 40-hour work week. That actually started in 1926 because of these auto workers, apparently. So, and then in I think it was like 1938 is when they officially made it 40 hours, but that's what they were first trying to push back in 1926. So here they are pushing for the 32 hours. We'll see. I gotta be honest, guys, I don't understand why unions still exist. If it's free market, pay them more if they do it and they're making money. But share your thoughts. Did anything, like I said, this wasn't the most interesting in terms of exciting or fun, but it's really good info. Please get social with us, guys. Follow us, share, subscribe, all that fun stuff. We appreciate you as always. And say goodbye to this because next time you see me, I'll probably be back to clean cut me. So have a great week. Appreciate you watching.